Good afternoon, my people. What is going on? It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I want to welcome each and every one of you to episode 146, America's Next Housing Crisis. Before we get into the content of the day, I want to practice the attitude of gratitude and say thank you, thank you, thank you to each and every one of you who are streaming with me live as we go over the Wealth Our Way page on Facebook and the Wealth Our Way network page on YouTube. If you have not subscribed yet, please do subscribe to the Wealth Our Way network YouTube page. I also want to give the Wild Nation salute to all the members of Wild Nation who watch our programs pre-recorded overnight, over the weekend, wherever they can squeeze 15 minutes of financial literacy in. And then last but not least, a heartfelt how are you to the good folks on the Life 101 platform who listen to the audio recording of this very here program. So I announced that we were having a format change to the way we deliver content. So last night, there was no Financial Power Hour. But Wednesday, April 27th, we will be right back at it with another episode of the Financial Power Hour. We will be returning some of the guests of our panel on the do's and detriments of dating under the Cost of Love series. So I'm looking forward to having each and every one of you here next Wednesday. And then, of course, for right now, we're going to stick with the Tuesday and Thursday 15 minutes of finance format. But we're going to start also putting some content out on Instagram. And I may bring back a Wednesday segment for the Instagram Live. Actually, the team is meeting today to determine how we're going to roll that content out. So with that being said, we touched on Tuesday about how corporate hedge funds and corporate conglomerates are purchasing single-family residences and the effect that that is having on the economy, on home ownership, on minorities, on the American dream, on wealth accumulation. We don't fully realize how when you push over a domino and the other dominoes begin to fall, what those other dominoes actually falling mean. So let's examine right now. There's a gentleman, I believe, I got my notes over here. I believe his name is Ryan December. And December is like December, but with a Z and where the C would be, Ryan December, who wrote a book called Underwater, the American Nightmare, Underwater, how our American dream of home ownership became a nightmare. I have not read this book, so I'm not endorsing the book. The subject matter of the book, though, to me is something that we need to look at. I have read a synopsis of the book in the New York Post, and the things this man talks about are startling. I touched on this Tuesday. So let's talk about it from the standpoint of American business. You have a large portion, you guys are probably on the internet every day seeing people talk about how they are working in real estate, how they are renovating homes, how they are flipping homes, how they are renting out Airbnbs, how they are just doing things in the real estate market. That is a large portion of how entrepreneurs choose to pursue their entrepreneurial dream, through working in real estate. I've told you guys before that the IRS code shows so much love to real estate owners, to real estate investors, to small business owners. So a lot of people decided that real estate is the way they want to go. I, at one point in my career in 1999 into 2000, I started buying houses in Philadelphia, renovating them, renting some of them out, selling some of them. It was very, very lucrative. The first property I bought was in West Philly between 60th and 61st, between Vine and Calla. I bought a duplex. I bought the property for around $4,000 or $5,000 at an auction. I put another $9,000 to $10,000 into the property. I rented both units out for 2 years. I think I was charging $475 on the one unit and $525 on another. So I was getting $1,000 a month for 24 months. So the 24,000 was more than I put into the property. I then refinanced the property and pulled, I think the appraisal value was 60 grand. And I was able to pull like 45,000 out. And then I sold the property 3 years later for $62,000. It was a home run. And I had several examples that worked that way. Well, now when people are going to these same auctions looking to buy these blighted properties, they are being outbid by corporate representatives who are sitting there just gathering these properties so that they can do the same process. At the end of the day, when the neighborhood gets the property renovated, it's better for the neighborhood. You to turn a blighted property into a property that fits into the scheme of the community, has tenants in it, and people are keeping the property up, that's a good thing. However, when the corporations, who we all know, we actually have laws in this country that prevent monopolies like the utilities and other big companies so that they can't get together, corner a market, and then raise prices on us. This is exactly what is happening in the housing market. You have these companies going to the auctions, bidding on the property, no matter what it costs, they're bidding on them, they're renovating them, and then they are renting them out, because rent is pretty much, people do fail to pay their rent from time to time, but most people prioritize their rent because living somewhere is your number one thing to concern yourself with. The predictability of rent streams is like selling a bond that's guaranteed to pay the interest all the time. So these companies are buying these properties, realizing the appreciation, and then they are raising the rents. In this one article, it was saying that they were raising rents as much as $200 to $300. I'm trying to find the American Homes, which is one of the companies that has been accused of taking advantage of this property. They raised their tenants' rent by hundreds of dollars in a month with little notice. That comes directly from the book. And since the company had bought so many homes in the area, there wasn't much that disgruntled tenants can do, because if they wanted to keep their kids in those schools and keep going to the church, all of the neighborhood basically was owned by this one company. The other problem with this, besides for the fact that you are squeezing out small business owners who want to be contractors, who want to be landlords, who want to be homeowners, is you're raising the price of homes. So right now, as I seek out a home, I can't find one at a fair rate because homeowners are holding out for the companies to come by and buy their home and pay more than market value for it. I'm not going to overpay for a home, so I'll just chill. What that creates, though, is a overpriced housing market, which, when you combine that with the fact that interest rates are rising, people are not going to be able to afford to buy these homes. You're going to kind of morph society into more of a renting society. You already have a younger demographic of people who feel as though renting is preferred over home ownership. So you're going to lessen the way that America primarily grows its wealth for the middle class, which is through the appreciation in the homes that they own. And you're going to have renters who think that they have predictability of housing costs because they may feel as though rents will go up 3 to 4% a year, but you don't actually have any control over what your landlord raises your rent to. And the more and more the corporations get together, they're going to form an alliance to do what is best for their pocket and not for you. So we could see the standard rate of rent raises every year go up to 5, 9, 12%. Then what are you going to do? You're paying a more appreciated rent price on something that's not an asset to you. And once again, as the saying always goes, the rich are getting richer in that case because they're holding these properties. Normal friend to the economy, Warren Buffett, is part of this gang that is doing this. He's partnered up. One of the first business books that I ever read was The Barbarians Are at the Gate. The Barbarians at the Gate was a story about the RJR Nabisco leveraged buyout. That just goes to show you how geeky your boy Big Tank is. I was reading this as a 6th or 7th grader. A leveraged buyout is when a company that's publicly traded, somebody decides they're going to buy all the stock back from everybody who owns it and turn the company from a public company to a private company. Whenever that happens, you have to raise a lot of capital, a lot of debt, and companies like brokerage firms and hedge funds, they are normally at the forefront of raising this money. One of the biggest companies is KKR, Kravis, Kohlberg, and I forget what the R stands for. Roberts, Kravis, Kohlberg, and Roberts. They were featured in the book Barbarians Are at the Gate because they were the group that ended up winning the bid for RJR Nabisco. With that being said, companies like that partnering up with the Carlyle Group, which is another huge company, and Warren Buffett, they are all getting together to basically pimp out the housing market. So when I tell you America's next housing crisis, when I use a title like that, why I am saying that is we already experienced a situation where minority applicants get turned down at a much higher rate for new mortgages and refinances than non-minority applicants. Now you're going to see that slide into non-minority applicants getting turned down more and more because there is no incentive for a company to overpay for a house and then turn around and sell it if they're not going to make the same margin on their investment that they could by collecting a stream of predictable rents. So in essence, you're going to start to formulate a society of American renters as opposed to American homeowners. We're going to then see the thing that most people use to secure all of their other debt, whether it's refinancing a house, consolidating outstanding credit cards through the ownership of their home. They're going to be unable to do that because the number one asset that most people would have, they won't have anymore. The increased rents will then lower their ability to contribute to their investment accounts and their retirement accounts, like their 401ks and their 403bs. I can't see, unless there's government intervention, I can't see how this ends well. When you look at the fact that interest rates continue to rise and that home ownership, even if you didn't have this problem of corporate rating of homes, you would still have a situation where you have people who have a devalued dollar, because as we said, we pushed so much money into the economy when the pandemic happened through these stimulus packages. More supply leads to a devaluation. We have a devalued dollar looking to buy an overpriced appreciated home or pay an above market rent rate. And at the same time, we have interest rates going up so high that any debt that we take on we're paying a premium on that debt. This looks like a triple witching. That's what they call when three things happen in the options market at the same time. The option expires on the same day that the strike price hits. It's a triple witching effect, multiple compounding of problems all at the same time. I don't have a solution. So, I feel bad. My best friend always says a problem is only a problem when you present it with no solution. And I haven't quite figured out how we fix the slope that we are sliding down. But this is something that I want to bring to your attention. If you are a renter, you need to start budgeting for increased rents moving forward, because even if your home is owned by a private landlord, if they see that corporations are raising the rent, they will go with the market. So everybody can be affected by this. If you're looking to buy a home, you're going to have to get creative with how you buy your home when you deal with the rising prices and the rising interest rates, like I talked about the other day, maybe getting a 10-year arm, 10-1 arm, because you're not going to stay in the property for 25, 30 years. These are all things that are now under consideration for everybody who's out here in the housing market. So I wanted to bring this to your attention. Didn't want to scare you as we go into the weekend, but keep an eye on this story. We will probably do a financial power hour on it in the next month or so. I'll bring in some real experts in the mortgage and the real estate areas who can talk more intelligently and more in depth than Big Tank can. With that being said, I want you guys to have an amazing weekend. I can't wait to see you Tuesday. I can't wait to get the financial power hour cranking again next Wednesday. And until then, remember how we do and what we say. Wealth is not only for the wealthy. Take care and have a